While the EU turbocharges its critical metals drive, Stuart's going to have a conversation with Mark Jarvis, the CEO of Giga Metals, Dave Gower of Emerita Resources, and it's been an interesting week for sure, and even some interesting recent news today. So let's dive in.
Great. So yeah, starting off with our two miners, I've got Mark Jarvis on my left from Giga Metals, and also David Gower from Emerita. I hope I'm pronouncing that correctly, David. It's Emerita.
Emerita Resources, yeah. Correct.
Right. Why don't we kick off with you guys just giving us a quick summary of your two projects, Mark? Do you want to lead off and just tell people what you guys are working on?
Yeah, we've got a giant low-grade nickel and sulfides deposit in northern British Columbia. It's unique. We get lumped in with with other large, low-grade, open-pittable sulfide deposits, but we're actually quite different in that this project is very simple. We're recovering pentlandite and pentlandite alone, and so it concentrates beautifully to about an 18% nickel, 1.1% cobalt concentrate with very low deleterious elements. So it's huge, it's low grade, and that makes it, from an investment perspective, very levered to the price of nickel. This will never be the low-cost producer. However, in a nickel environment where long-term, this new use for nickel in batteries is just devouring, ever more nickel. There's a range of maybe 25 or 30 projects in the world that would probably have somewhat similar economics. They're not going to get built at low nickel prices, but as the price of nickel goes up, the depreciated net present value balloons, and that's really the only way to describe it. So you can think of it as a very leveraged bet on the price of nickel.
And David, Emerita, a bit closer to home than Canada.
Yes, Emerita Resources, we're a Toronto Ventures Exchange listed company, but our projects are in the south of Spain, in the famous Iberian Pyrite Belt, not that far from the Rio Tinto deposit, where Rio Tinto, the company, began its life in the 1870s. So it's an area that has had sustained mining activity really since the Romans. We, through last year and into the early part of this year, drilled off a very significant deposit very close to the Portugal border on the Spain side. We had 15 drills operating through that period and have delimited about, well, by now it's over 20 million tons. And this deposit is from surface down to 600 meters, which is, by Iberian Pyrite Belt standards, very shallow. The operators in the region are, if you look at Lundin at Neves Corvo or Sandfire at Aguas are operating at depths of 1.5 to 2 kilometers. So the economics of a discovery that close to surface obviously are greatly enhanced by that. The next step for the project is actually to go through the mining permitting process. We applied for the mining license in September. We've done the baseline studies required for the permitting. We're filing all of the documentation in the coming week, which will include not only the environmental mitigation, at least the initial solutions, if you will, but also a high-level scoping study, basic engineering, which is primarily at this level designed for siting the infrastructure so that infrastructure can be properly permitted and the respected requirements for construction, et cetera, can be respected, et cetera. So that's an exciting step for the company. We will go into proper feasibility in the coming year on this deposit, and through an iterative process, probably within 1 year, should be in a position to acquire the actual mining license.
And you're obviously Spain, and you've been dealing a lot with the local mining regulator and approvals process. From your perspective, how important is it for someone like A, Spain, but two, the EU to have a potential resource like that right on its front doorstep, and particularly now?
Well, certainly the EU, through COVID, like much of the Western world, actually had a little bit of a shock in terms of supply chain issues for domestic manufacturing. And for that reason, they are now implementing a strategy where they want to see 10% of their critical metals produced in the EU by 2030, and they want to be as high as 40%, I think, by 2035, which is probably impossible, frankly, in that timeline. The permitting process, the actual technical process of discovering and delimiting and financing and building a mine these days is more like 10 years than in the 1960s you might have been able to do it in 5. But
Can you go right to the mic, please?
sure, okay. So yeah, this area of Spain has been designated by the EU as a strategically important area for critical metals, and my understanding is the EU is on the verge of creating a very large fund to support mining and metallurgy development in the area. The government of Andalusia has also passed a resolution through its parliament declaring underground mining as a preferred economic activity in the region, and they've taken steps to also expedite the permitting process, which is known to be fairly onerous there. The step they've taken basically is when you qualify as a nationally important project, they will assign a senior bureaucrat to your company or project to help you navigate the various departments of the government for the permitting.
Gotcha. And the Canadian perspective with nickel, I mean...
Well, I'd like to pick up on something that David was saying there. Permitting is politics, and the political environment has changed substantially in Canada, particularly for what are defined as critical minerals. So, I always hope that it's not just talk. Canada has a famously slow environmental assessment process. They're vowing to speed that up. And in fact, the Minister of Natural Resources recently announced that they're going to spend about $1 billion, sort of ramping up their internal ability to turn environmental studies around.
Oh, yeah.
Because the problem would be you would do your work, you submit your document, and it would rot somewhere for a while. So they're vowing to change that. And that's good. But also just in general, anything associated with EVs, we've got a political party in British Columbia that historically was thought of as anti-mining. I don't think they ever actually were, but they certainly did scare away capital. Now they've turned completely around, and they're now talking about, building gigafactories in British Columbia and having the whole battery supply chain in British Columbia. So, I'm happy about all that. What I'm not happy about is the nickel market itself right now. It's slid sharply in the last 6 months. We're quite close to the markets. At least our president, Martin Bydron, knows the nickel market very well. He's ex-Sherritt. And, he thinks we've got headwinds for another 12 months. So I can't offer any encouragement on the commodity price. And then plus, we've hit, and particularly in London, I'll call it a horizontal hangover. Once again, the nickel laterite deposit has destroyed an enormous amount of capital. And so people that were enthusiastic about nickel are terrified of nickel now. So, again, couldn't be a worse market. And I think our market cap reflects that. We've got a very strong partner in Mitsubishi Corp. So that helps it helps with our survivability in a bad market. let's put it that way.
That I was going to ask you, how important is it to have that level of strategic partnership? Because that's obviously a big name in mining, and to have them in the passenger seat with you must be awesome, particularly if you go to Japan.
It's awesome in many ways, both in dealing with governments. We're taking it a little more seriously. If we're hand in hand with Mitsubishi Corp, they're investing significant money in British Columbia already. And then when we go to meet other companies, we're trying to avoid selling stock to the market because, frankly, in the current environment, I would prefer to be a private company. Seriously, there's no advantage to the listing. So we've been structuring our financings by selling pieces of the project itself. And that's what we did with Mitsubishi. They bought 15% of the project. And then we're now trying to get someone else. And we've got a lot of work to do to get to final investment decision. It costs a lot of money with a large tonnage project like this. We've got almost 1 billion tons of reserves now, plus, resources beyond that. So every step costs money.
Yeah. I mean, David, do you think with mining projects like these that we're going to see new companies coming into the space because of the underlying resources that are represented? I'm thinking here of guys like OEMs who might want to leapfrog over the intermediaries to go straight to the mine, so they get access to that kind of supply. I mean, thinking about you guys having a project, for example, in Europe, where there are several big players.
Well, certainly, I think for the first time we were seeing OEMs. I'm also involved with the founder of a lithium company in Brazil, which is also going through, will put its bankable feasibility out in January. And there's huge interest in the lithium space from OEMs, particularly for projects that are imminently headed for production. I think one of the earlier speakers mentioned, the lithium space has gotten very crowded, but you have to sort through that to find the ones that are actually on track to production, which is what these groups are doing. And they were looking to deploy massive amounts of capital in the form of prepay, for example, for product, et cetera, to ensure that they have their supply chain. There are huge investments being made into hydroxide plants, for example, to support the future automobile industry primarily. And there will not be enough supply relative to the, at least the projected or the almost the legislated direction for where vehicles are going for about 10 years at least. I think eventually the supply will catch up, but this part of the market for many of these commodities, it's relatively new that it's become a bigger market, and you can't just go to Walmart to the sales shelf and buy this stuff. You've got to. It takes a long time, a lot of geological ingenuity, a lot of money, a lot of time to drill. You have to go through the permitting process. All of these things take years now, and so I would say there's a fairly large concern, and of course there's also, the whole China versus the rest of the world dynamic here. China was very early to the table. I think they basically told the world around 2006 that they intended to become dominant in this space, and they proceeded to do it. Well, kind of the rest of us weren't paying enough attention, and now suddenly they are actually in a situation where they control many of these commodities. So it's you see the European Union and the U.S., particularly at the government level, also taking very strategic positions here. With respect to the base metals, I think it would be less so than the actual direct battery metals. However, things like copper, as much as you need lithium, you can't do it without copper either. Commodities like zinc or nickel, similarly. Zinc may be less so presently, but there's actually huge developments going on for zinc batteries. They won't be competing for the automotive space, but they may be better for storage of sustainable energy from wind farms and solar farms, which is also a big issue. These types of facilities often produce peak power that's not synchronized with peak demand. So having storage facilities so that you can moderate that is critical for future developments. And it looks like, zinc will have possibly a very important role to play. The batteries in that case will be the size of shipping containers as opposed to something for a car. So, yeah, there is a move. What I would say, because we have been in negotiations with some of these people, it's very complex because it's not their business. And it makes them very slow to make decisions because the amount of due diligence they have to do just to educate themselves is very high. Where I see possibly a very important bridge to the OEMs is through groups like Glencore, Trafigura, the metal traders, who do understand that business very well and are already, in many cases, suppliers or the bridge to their chains. I see that type of joint venture, even with the LGs of the world, et cetera, being very important to sort of bridge that lack of expertise that the OEMs have.
And do you think having a project in Spain, there's an element of premium to be paid because you're in Europe, you're right there on the front doorstep,
Certainly,
versus one like which was in South America?
It is actually receiving a premium, which is interesting because a few years ago it would have been seen as a negative. But we've seen such political turmoil in many of the African jurisdictions or South American jurisdictions, such that European sort of first world countries from a development perspective are now receiving a premium. Certainly Canada, I'm the director of Alamos Gold, and we have 2 mines in a development in Canada. It's trading at a premium to its peers by virtue of the lack of political risk related to those operations. So I think Spain also, and as was mentioned earlier, we're seeing a shift on the bureaucratic side because of the critical mineral situation towards much more desire for countries to have their economies participate in that part of the supply chain. And that's also very helpful because the bureaucrats are now more motivated to do their work and try to assist in the development as opposed to, in many cases, they were actually seem to be working to block it historically.
And Mark, Canada, is that same for you? Because obviously nickel right there on the US doorstep. I know you're feeling a bit negative after a week in London, but
Oh, yeah, no,
ahead.
Fortunately, we've got enough capital to survive. And we've just come out with a pre-feasibility study. We do have to raise significant capital to make meaningful further progress with the project. But yeah, one of the things that Mitsubishi was attracted to is a Canadian asset. They like dealing with Canada. And then if you look at the OEMs, they're going through a learning curve. And, one of the things is that if you're a premium brand, you don't want to be associated with environmental degradation. We're talking to a premium brand in Europe. They're terrified of touching anything from Indonesia because of the environmental degradation that's going on. So that's helpful to us because Indonesia is fierce competition for the reason that, they're makers of battery materials or HPAL projects, which are not that, even the successful ones are not that economic. Our economics compete very well against an HPAL project in Indonesia that's capable of putting out 35,000 tons a year of nickel, as our project is, Our CapEx is about $2 billion. Their CapEx is about $3 billion US. However, where they outcompete us is they can basically get a permit tomorrow. And in Canada, we do have to go through an environmental assessment. That's a double-edged sword, though. So it's, in purely competitive terms, it's uncompetitive. But in terms of the ultimate end users of our nickel, which in many cases will be the OEMs, it's actually a plus. So they can take a longer view and recognize it's going to take longer to get this mine in production than something of a similar scale in Indonesia. But they're okay with that. And I can tell you that the OEMs, their main concerns right now, the two minerals that they're the most worried about are nickel and lithium. I can also tell you the battery companies, who I think should be looking to invest upstream and diversify, I don't think any of them are going to do it. They're too conservative. We've had lots of discussions, and I just don't think they're there. A couple of the OEMs are aggressive. That's the way I would describe it. And I think things are going to start to happen. And they're going to start to happen outside of Indonesia. Ford has sort of stumbled into a project that in Indonesia, I have no idea why they're involved with it. I don't think it's going to end well. And I just think it's a mistake in terms of branding as well. But anyways, yeah, to answer your question, Canada's a good jurisdiction. It's viewed favorably by a lot of people.
And just finally, I wanted to ask you, I mean, it's a $64,000 question. The valuations of smaller mining stocks at the moment are really, really cheap. What do you think is causing that, and what do you think will change that?
Well, whatever you can say about junior mining stocks, you can say it in spades about nickel, especially right now, especially after, Horizonte did a huge CapEx overshoot.
And David, what do you think in terms of the valuations?
Well, I think, again, your earlier speakers highlighted just how dire the microcap market is, and certainly the mining sector is probably leading the charge in that regard. What I will say, I spent the last 3 days at Mines and Money here doing one-on-one meetings with European investors. We were here last week for the one-to-one conference, and we're also at the Swiss Mining Conference this week. We had a full slate of very good meetings, and I did a similar one in Toronto about a month ago, and it was almost the most depressing, to the point where I almost dreaded coming to these conferences because I didn't think I could stand 3 days of us crying on each other's shoulders. But actually, in the last month, there has been a significant warming in the commodities market. We could have, if we had a deal live now during this conference and one I did recently in New York, I could have filled a book easily. There's good interest. There's money on the sidelines. My sense is many people do view this as a bottom in the sector. Metal prices are also at a bottom. And watch nickel. I will tell you, I used to be the global exploration manager for Falconbridge. I spent a lot of time in nickel. It tracks industrial production globally almost exactly. When it comes out of a long bear market, my old boss, who's a Mining Hall of Fame inductee, used to chart the nickel back to the 1920s, in fact. The longer and deeper the bear market in nickel, it will come out like a rocket after that. And we've seen that every time. If it's a relatively modest bear market, it'll be a relatively modest recovery as well. But
I am so happy to hear that. Thank you very much.
so generally, I think we are starting to see, certainly we're starting, and I think I agree with earlier comments that the cap on or the cessation of increasing interest rates is going to be a very important turning point. The gold price is starting to move, and we're also starting to see more deals. I think a lot of the negative sentiment is actually driven by bankers who haven't had any deal flow to actually pay their bills in the last 18 months, to the point where, you know, they're having difficulty covering their overheads at this stage. So everybody is hungry to get going. The valuations are such that people should make money, and we start to see the smart money, I think, already showing up. Certainly at this conference, talked to my colleague in Zurich, his comments are the same. So I'm delighted now that I came, because it was very uplifting the last few days to speak to people that seem excited about what's going to come in the next year.
The last time we had a mining panel, it was an online one, and at the time we got very bullish on uranium. So anyone who was listening to that one has certainly made money since then. So maybe we'll see the same coming from nickel as well. Great. Well, thank you very much indeed, guys. That concludes our mining panel, and a round of applause for our two CEOs.
Thank you.